there is a very, very high chance that you have seen this chart before, right? This is Bitcoin on a logarithmic scale, a long-term chart starting in the middle of 2015. But I think this chart only shows half of the story because this is Bitcoin denominated in US dollars. But I think it's wrong to look at this in US dollars because the money we put into Bitcoin is not deployed in any other asset, right? We don't really look at opportunity costs, and that's actually what we should be doing. And what's the best proxy? What's the strongest competitor to Bitcoin in terms of capital? It's probably the Nasdaq, right? It's the Nasdaq 100, the US technology stocks. Let's look at Bitcoin divided by the Nasdaq 100. This is the chart. Now this chart shows a very different story. By that metric, we have already come below the high in 2018 by more than 40%. We can also see that from the bottom, right? The crypto winter bottom at the end of 2018 to today, we have only seen an outperformance of 275%. Now that's still a lot of outperformance for roughly 3.5 years. But still, if we look at the volatility of Bitcoin and the technology stocks, it's on a very different level, right? This is again Bitcoin in US dollars. And the worst drawdown we saw from top to bottom is more than 80%. When we look at the technology stocks in the same time frame, this is the chart. Now, what's the worst drawdown over here? We've got the Corona crash. That was roughly 30%. And the recent downturn, roughly 34%. So nowhere near the drawdowns that we saw in Bitcoin, either in 2018 or even today, where we are down by 70% roughly. Now, why does this all matter? Because we have to put outperformance in perspective, right? We have to look at risk to reward. And if you simply just look at the recent performance, right? If you just look at the US dollar amount, it all looks nice and rosy. But if you look at this in terms of risk versus reward, are technology stocks really worse? So could one argue that maybe buying technology stocks on leverage might be less risk overall than buying Bitcoin without leverage? There are fancy ways to calculate this, right? We can, for example, calculate the Bitcoin Sharpe ratio using the Nasdaq as the benchmark. But if we simplify this simply by the maximum drawdown, the volatility that we have to potentially endure versus the outperformance that we get, it's not 100% clear that Bitcoin still is the winner. In Bitcoin's early days, this has obviously been the case, right? So when Bitcoin was just a few cents, it was rising really, really quickly. Technology stocks were no comparison. But pretty much everybody sees Bitcoin's returns diminishing to a certain degree. We can simply just connect the bottoms over here. We can also look at a logarithmic regression analysis, right? The growth in the early days was steeper than it is today, which makes a lot of sense. It takes more capital to let Bitcoin grow. There's also way less risk in owning Bitcoin today compared to when it was just $50 or $500. Now, what does this all mean? I think it's important to appreciate that Bitcoin is not the only asset one should be invested in. It's important to appreciate that relative to technology stocks, we might not be growing as quickly as one expects. It also means that taking advantage of these bull and bear markets and starting to time Bitcoin might become more important. You really don't want to be in these 80% or 70% drops anymore. You rather want to be allocating. So one simple solution is to own, say, the Nasdaq ETF QQQ and to also own Bitcoin and then to simply shuffle this around, right? Have a target allocation to each of those assets. Say you want to be 70% in stocks, 30% in Bitcoin. You could then sell off your Bitcoin as we gain in valuation of Bitcoin versus the Nasdaq, right? Your portfolio would then be overweighted in crypto assets. So you sell off, you shuffle this to technology stocks. And the same is true the other way around, right? Once we fall, then you want to be selling your technology stocks and buy Bitcoin with it. So you can have the best of both worlds, right? You can have exposure to technology with comparatively little risk and at the same time exposure to Bitcoin, you simply ride those waves by balancing the portfolio from one asset class to the other. Right now, a lot of models, not just this rainbow chart, right? The market value, realized value, Z-score, the 4-year simple moving average. A lot of different models tell us that currently we are comparatively low. So it might make sense to rather be heavy in Bitcoin compared to tech stocks. But it's important to take profits as we turn around. Bitcoin used to massively outperform technology stocks. This is, since 2018, not necessarily that much the case anymore. There might be still somewhat of an outperformance, right? Bitcoin is still more risky, it's still more volatile, but it's nowhere near to the early days. I know this is a somewhat controversial topic, right? Most people are either in Bitcoin or in stocks, especially the audience over here is probably not that heavy in stocks. But I really think just looking at US dollar valuations doesn't do us any favor. We really want to look at this in terms of opportunity costs. And if we just look at the current cycle, right, the bust and the boom, if we take this from one top level to the next, we only saw 60% outperformance over this entire cycle. Not necessarily a lot, given that the additional maximum drawdown from top to bottom, Bitcoin relative to the Nasdaq, was 84%. So take from this whatever you think is right. I personally think we should not dismiss technology stocks at all. It does make sense to be diversified across asset classes, even though the correlation tends to increase over time. I still think it's better to own more than just crypto. And of course, we have seen more volatility also for technology stocks in the past, right? Bitcoin only existed since the global financial crisis over here. So it has never seen a time where technology stocks went down by more than 50%, or over here during the .com bubble by more than 80%. But still, let's try to be somewhat free of emotions here. Let's try to sell whatever tends to be relatively high during a certain period of time. And we've got plenty of models here in lookintobitcoin.com that show us if we are rather high or low right now. So let's take advantage of those models, sell when Bitcoin is high, and allocate this to something less correlated and less risky. That could be technology stocks. It could even be something like gold if you're very, very risk averse. But it does make sense given that the outperformance of Bitcoin versus risky stocks isn't that high anymore, to not just buy and hold, to somewhat ride the waves, to somewhat balance the portfolio. There are more videos regarding portfolio allocation and mindset for the premium members here at thebitcoinstrategy.com. Feel free to check it out. The link is in the video description. It's currently $49 per month. More information is in this video over here. Hope to see you in that video, and thanks for watching this one. Bye bye.